Hi guys, it's Arab the Plug and you are welcome back to the channel. And in this video, I'll be talking about support and resistance and how you can use support and resistance in your day-to-day trading to make money. Support and resistance is actually one of the concepts that every trader needs in the cryptocurrency or the forex trading market. So whether you trade forex, crypto, stocks, indices, this particular video is actually for you. So in this video, I'll be talking about support and resistance, how to identify them in the chart, how to draw support and resistance, and also how to make use of support and resistance to get accurate trading decisions in your trading journey. So if you're interested in content like this, ensure you like the video and you hit the subscribe button so that you get to see my videos once I post them. So this video is actually going to be a long one, but I can assure you that it's going to be worth it at the end because you are going to get a massive value for every second you spend on this video. So let's write on it and write to the end of this video so that you can get absolute value from this. So let's get right into it. What is support and resistance? Support and resistance is actually a support. Let's start with support. Support is actually an area or a level on your chart where buyers are actually looking for a way to open buy trade. So at support, buyers are looking for a level or where to get an area, where to get an opportunity to buy. While at resistance, sellers are looking for opportunities to sell, or people who have bought already are looking for opportunities to take profit. So all these concepts, I will explain them in the charts. I'm going to focus more on explaining them using the chart. So let me explaining the concept of support. Let me use an example. Let's say, for example, you want to buy an iPhone. I will appreciate if you can listen attentively to this particular example. Let's say you want to buy an iPhone and you want to buy iPhone 15 Pro Max, for example, and you go to the market and iPhone 15 Pro Max costs $2,000. So let's say this place is $2,000, which is like the cost of iPhone 15 Pro Max, and you only have $1,000 with you. And on Monday, you get to the market, you ask for the price of the iPhone, and it is $2,000. Then you go about doing your day-to-day activities, and in the evening, the price of iPhone drops to $1,100. And you're like, wow, the price has come down, but you were not there at that time. So it was after like 3 hours when the price came down that you got to know. And before you got to know, the price has already moved up back to 1,900. And at 1,900, it is expensive already. But it's not as expensive as the 2,000 price, right? But at 1,900, it is expensive that you don't want to buy. So on Tuesday morning, you go to your job, you go to your office, and when you are at office busy doing one or two things, the price of iPhone drops to $1,000. But you are not aware. And during this time that you are not aware, you've not been there, the price dropped to 1,000 and went back up to 2,000. But when it dropped to 1,000, you were actually not there and you were unable to buy the phone. But you were not happy because you were like, oh, why did I miss out on the opportunity to buy it when it was actually lower? So on Wednesday, let's say probably you go with your friends, you go out on a picnic, and price drops to 1,003. But then you were there, but you were not interested because you actually have $1,000 with you to purchase the iPhone. Then let's say the price goes back up. Then on a Thursday, price drops to 1,100 again. But this Thursday, you were so busy with work, we were looking at a lot of files, and you are unable to buy it until the price goes up again to 1,008. At 1,008, it's too expensive for you. Let's say on Friday, price comes down back to exact $1,000 that you have. But you were still not in the market, you were busy with something. And on Friday night, you went to club and stuff like that. And that is how the price moves that week and you're unable to purchase the iPhone. And the market closed. Then you come back next week to also try and monitor the market and catch that move for you to be able to buy the iPhone at 1,000. So this thing you just have now is more like a graphical representation of the movement of price of that particular iPhone throughout that week. And you would see that anytime the price comes around here, it moves up again, because whenever the price becomes cheap, a lot of people come and buy it so that they can sell it when it gets expensive or when it becomes expensive. That is simply the concept of support and resistance. So this is more like a graphical representation of what has happened in the market for this iPhone over the past 1 week. And that is more like what we have in the crypto market or the forex market. So in the market, price moves up and down. Price never goes up in a straight line or comes down in a straight line. It moves up and it comes down based on demand and supply, because the market actually moves based on demand and supply. So when price comes down, you will see that price does not always come to this $1,000 mark for the iPhone. Sometimes come to 1,000, sometimes come to 1,001, sometimes to 1,002, sometimes to 950. And when it goes up, it doesn't always goes up to that exact price that it goes up to. Sometimes go to 2,000, 1,918. That is the concept of the area of support. So support is more like an area, not a straight line. An area where whenever price comes to those area, buyers would be interested because they consider it as a cheap price at that particular area. And resistance is more like an area on your chart that whenever price comes to that area, buyers would be selling. People that have already bought at these areas would be selling and taking their profits. Or maybe sellers would start selling their market because they consider it too expensive at that particular point. So let's say you bought these iPhones at these areas at 1,000 and you get to 2,000. What will you be doing? You'll be selling to take profits. And let's say you had onboarded the iPhone long ago. And what you will be doing at this point, you'll be selling. So that is the concept of support and resistance. Support is more like an area on your chart whereby whenever price comes to this area, you want to buy. You are looking for an opportunity to buy. And resistance is more like a level. Whereas whenever traders are looking for opportunity to sell at that particular area of the chart. So looking at price action, look at the chart. Before I go into the chart, let me do a little bit of explanation using the iPhone concept. So whenever the market comes to those areas, people want to buy. And whenever market goes to this resistance, people want to sell. So this first gives you the concept of support and resistance. As a trader in the crypto, the forex, or the stock market, you want to wait for market to come to support for you to look for opportunities to buy. I'm not actually saying you have to buy whenever the market hits the support. But when it comes to support, you look for opportunities to buy. And when it comes to resistance, you look for opportunities to sell. So now let me expand this a little bit. So let's say now market comes back to this area and the price now of iPhone, going back to the iPhone example, sells at 1,000, then it drops. It drops below 1,000, come to let's say 500. Then from 500 it go back to 1,000. Then it go back to 800, then to 1,000, then to 700, then to 1,000, then back to 500, then up, then the market go back to 1,000. You would see that in this kind of scenario, it has happened that there is another price point here that has become a support level, because anytime price comes back to this area too, buyers are willing to buy. And in this kind of situation, whenever the market comes back to this area, people are now selling because of the turning point of price. By breaking out from this particular place where buyers used to buy to coming down below to become cheaper, then buyers now creating a new bias that, okay, now we are not going to buy here again since it has given us a cheaper opportunity. We are going to always look for a cheaper opportunity to buy here again. So now with this kind of situation, we say when this support has broken and it has become a resistance. So support can become a resistance and resistance can also become a support. That is the point I'm trying to drive. Now, this is now a support. This is now a resistance, right? This is, previously it was a support because it was holding this price from coming down. Anytime price comes to it, buyers want to buy. Anytime price comes to it, buyers want to buy. Then they buy and the price goes up. But at this point, there are no buyers interested. Then the price drops more and buyers now got opportunity to buy here. Once they got opportunity to buy at a lower price, they would never want to buy at any price higher than this again. So they will always look for opportunities for price to come back lower. That is the concept of demand and supply, and that is what support and resistance tells you. So whenever support turns a support can also turn its resistance, and resistance can also turn to support. So now let's say for this iPhone, the price goes up again, then comes back to this area, then goes up, then comes back, goes up to 18, comes back here, goes up, comes back. Then in this kind of situation, we say this place that had already served as resistance before now has become support again, because this area is where buyers are looking to buy again. So this is pretty much the concept of support and resistance, and I hope you get it. So now let's go into our chart and do a graphical representation of that on the chart. So let's look at Euro USD for the forex market. Let me just get rid of this, in as much as I really don't want to get rid of this. Then let me just look for Euro USD from a different Euro USD FXCM. Fine. So let's look at Euro USD. Right, this is the chart of Euro against the US dollar on a 1 hour time frame. So let me switch to 4 hour time frame a little bit, and also get rid of all the things I have here. So this is the price, this is the chart of Euro USD, and you will see in this market that this particular area, there is a particular area that whenever the market comes to it, the price bounces. So look at this area, for example. Look at this price point, for example. This is like an example of an area of support. Why do we call it an area of support? We call it an area of support because during this price movement, whenever price drops to this particular area, buyers come in, push the price up, price came back to this area, buyers came in and pushed the price up, price dropped again, buyers came in, pushed the price up, it dropped again, they pushed the price up, dropped a little bit, pushed the price up, before it eventually broke the support at this point and the price started moving down. Right? That is the concept of support. Support is more like an area. So if you are trading, if you are analyzing the market, anytime price comes to this area during this particular price movement, you look for opportunities to buy. You are not actually buying immediately because sometimes support gets broken, but you look for opportunities to buy. That is more like an area of support. So also we can look at this area as an area of resistance. You can actually look at this area as an area of resistance. Right? This particular area, you can look at it as an area of resistance because anytime price comes to this area, it bounces. The reason why I call it an area is the example of iPhone I gave earlier on that. There is actually not an area. It's more of a concept of an asset becoming cheap or becoming expensive. It's more like an asset becoming overpriced or underpriced. So at this area, so that is why sometimes when I draw my support and resistance areas, I don't use a straight line. I use a different tool, which I will also talk about later on in this video. So I prefer to use this particular tool to draw my support and resistance because with this tool, it draws it as an area and not a straight line. So something like this, I draw it like so that it looks like an area. So the simple concept is that when you are trading in the forex or the crypto market or any market you are trading, When price approaches area of resistance, you look for opportunities to buy, or a resistance, you look for opportunity to sell, and when price approaches the area of support, you look for opportunities to buy. But how do you buy? Do you buy immediately? What are things you look for to buy? I'll talk about them later in this video. So let's look straight into another example. Let's look at BTC USD. Let's look at the Bitcoin market. Right. Let me switch to a higher time frame so that I can get clearer pictures of what is happening in the Bitcoin market. Right, so this is the Bitcoin market. This is the Bitcoin market on the 4-hour time frame. You would see that I actually have a lot of lines drawn around up and down. Let me get rid of all these lines. Yeah, so I just got rid of all the lines on the chart. So now let's look at this chart in a much clearer picture. You would see that there are actually some levels that market has respected over time on this chart. And if we draw them, we'll look at this particular point. So now let's talk about how to draw support and resistance. One of I actually have some strategies I use to draw support and resistance on my chart. And I actually do it using 3 steps. The first step is to zoom out on your chart. Zoom out your chart so that it becomes clear. The reason why you zoom out your chart is that when you are trading, you want to be trading at using the exact thing you are seeing on your chart, because you are trading based on price action, and price action is more like what is happening in the market. So you want to be trading at the exact point where something is actually happening in the market. So now when you zoom out your chart like this, you draw out areas of support that are the most obvious for you. So if you are doubting, is it there, is it not there, then it's not there. So if you look at this place, you see that this is actually an obvious area of resistance. This is an obvious area. Let me just do a little bit of settings on this. Let me change the color. Perfect. So you see that this is an area that is actually obvious. That's like an area of resistance. And I might decide to use this tool actually, which is preferable. Perfect. This is an area of resistance. Why do I call it an area of resistance? It is because anytime price comes to that area, it reverses. And you can see that you can actually extend it to this particular point, because there is a lot of multiple rejections on this point whenever the market has reached it. So let's date it back to, this was March 2024, this year, March 2024. Price hit this level, it rejected. Right? When price hit this level, it rejected. Then price came back to it again, got rejected. Then price came back to it again, got rejected. Then price to move up, price tried to move up, rejected, moved up, rejected. Then price came back to it and gave us a very high price for Bitcoin, got rejected, went again, rejected, went again, and it has just rejected it again today. So that's an area of resistance whereby whenever price comes to it, you expect that the price might bounce. I use the word might because there is no 100% certainty in the cryptocurrency or the forex market, right? So that is an area of resistance. So that's the first thing. You draw an obvious level. So once you are doubting, is it a support, is it a resistance, then you know it is actually not. Then if you want to draw a support on this line, then you see that this is an area the market has reacted to several times. You see that anytime market came to that area, it bounces, except this time that it broke the support. But when it's broke, it still came back, held the support before the price started moving up. Now let me chip something in briefly. We actually have like 2 types of support. We have global support and we have local support. Global support are like support that you draw on the higher time frame, like the 4-hour, the daily time frame, weekly and monthly. Those are the global support because they are areas that are much tested because they are on the higher time frame. But local support are support you draw on the 15-minute time frame or the 5 minutes. Okay, this is like 15-minute time frame. You can see that on the 15-minute chart, the chart is actually more noisy, and you can actually draw a support here, right? Because this is what is happening exactly at the market. This is a support on the 15 minutes. This is like a minor support too on the 15 minutes, right? This is like a minor support. So we have global support and we have local support or minor support. So let me go back to the 4 hour. You see that on the 4 hour, drawing the obvious areas of support, I have drawn the 2 major obvious areas of support. Now, for you to trade, you don't trade on the higher time frame. You just use the higher time frame to like understand the biggest picture, the large picture of the market. So now, after drawing your area of value on the higher time frame, sometimes you don't draw it on the higher time actually, depending on the strategy you use to chart. For me, I draw it on the higher time frame that I use it to identify the chart or the trend of the market. The market is actually in an uptrend. You can see series of higher highs and higher lows. Then I scale to lower time frame to identify immediate support so that I'll know what exactly is happening in the market. Because if you look, if I scale back to the 4 hour time frame, you see that you say you want to buy at support, and this is this most obvious support I see, and also this is actually an obvious support because the market has already always bounced here. And you know, when you're talking about support and resistance, there must be at least 2 bounces or 2 touches. You can see here we have 1 touch, 2, 3, 4, like 5, 6 different touches. You must have at least 2. So the more the levels, the more the touches, the more the bounces of the market from the area of support or resistance, the stronger the level becomes, and the higher probability that you are going to like get a high probability trade from it. So now, this is a resistance, this is a support, this is also another support, and all that drawn on a higher time frame. But if you are a day trader and you trade on a lower time frame, this is a very good adjustment. Fine. If you are a day trader and trade on lower time frame, so I'll advise that you scale to the lower time frame to get the immediate support and resistance for your trade. So now, scaling to the lower time frame, if you are a day trader, you would see that this is actually an area. I'm not going to call it a line, an area, because it is an area that the market has always come through to, and you see that we have at least 3 bounces from this area. The market came to this area, came up, reversed, came up, reversed again, came up, and it's already coming down to this area. So at this, if the market come back to this, you can see that when the market came back to this area, it's already moving. But for you as a day trader or someone that trade on the lower time frame, you can actually mark out this area as an area where you will be looking for opportunities to buy this crypto, to buy this Bitcoin, and probably target the highs. So as a trader, you buy at support and you target areas of resistance. So quickly, before I look into how to trade support and resistance, let me switch to some other assets. This is GBP USD on the 30-minute time frame. Like this is GBP USD on the 30 minutes time frame. So let me switch to a little bit higher time frame. You will see that looking at this market, I have actually drawn a lot of areas of value on it before. These are some trend lines that I have drawn in the past, and these are areas of support and resistance. You would see that this is clearly an area of support. These are another support on resistance or resistance on support, and these are another resistance. So these areas, markets has traded from this area, and at this point, it's at a resistance, bounced at the resistance, and is coming back to an area of support. So this particular area is an area of support or demand zone where you'll be looking for opportunity to trade GBP USD. So this is pretty much how to trade, so how to draw support and resistance level. You identify the swing highs and the swing lows on your chart. Look at where you get multiple rejections for support and also multiple rejections for resistance, and you draw an area or a line using this on any of these drawing tools on it. So let's look at US oil or crude oil, one of the assets that I trade in the forex market, you would see that let's look at the weekly for US oil. This is a higher time frame. You see that the market is at a support on a higher time frame. So the time frame you trade depends on your areas of value. So this is a support. It's coming to a support on a higher time frame, and it's more like a demand zone. And you see that whenever market comes to this area, there is always a bounce and a push up, and the market always pushes up. So this is like an area of support for US oil on the weekly time frame. And what will you be expecting here? You'll be expecting that the market is going to bounce up and you are going to ride the wave up. So that is pretty much what support and resistance is. And you see that the market has always created a resistance around this area. But let me just use this rectangle tool. Anytime the market has come to this area, it has always formed a resistance. So supports are areas where you look for buying opportunities, and resistance are areas you look for selling opportunities. So now let's talk about how to trade support and resistance. Alright, so talking about how to trade support and resistance. So there are actually two ways by which I trade support and resistance. The first way is the bounce of support and resistance, and the second way is the break of support and resistance. So the bounce is mean like, okay, when the price comes to the support, it's going to hit the support or hit that area of support, and then the price will go up. That is bounce. Or whenever the price comes to a resistance, it's going to hit that resistance and bounce back, which means you're going to take short trade. And that is the bounce of support and resistance. And also, I trade the break of support and resistance. Break means whenever price comes to support and resistance, you expect price to break the support and the price will come down. So there are basically two ways I trade the support and resistance. The first one is the bounce, and the second one is the break of support and resistance. So let's look at opportunities. Let's look at examples to trade support and resistance. Bounce. Oh, damn. I have way too many. Alright, this is EuroCAD on a weekly time frame, and if you look at this chart pretty well, you would see that our market has created a series of highs and lows on this chart, and you will see that let's switch to like let's switch to a 1 hour time frame for EuroCAD and analyze from the 1 hour time frame. Alright, perfect. So looking at this EuroCAD market, you would see that the market has created a resistance at this area. Right? This is a resistance that later turned to support. Right? Why do we call it a resistance? We call it a resistance because anytime the market comes to this area, it always creates a bounce, right? This is what I'm trying to say. The market was coming, came here, got rejected and came down. Came here again, got rejected, came up a little bit, came down, tried to break it and got rejected. Then that is how it has been happening. So now, anytime, if you want to trade the bounce of support and resistance, anytime market comes to this area of resistance, you anticipate that you look for opportunities to sell because it is a resistance, and at the resistance, the asset is overpriced and you're expecting it to drop. Then that is bounce. For break, you expect that sometimes when the price comes to support and resistance, it breaks. You can see at this point, price came back to here, dropped a little bit, and then it broke the resistance, and it came down and created a support around here. So that is why I said earlier when I was explaining using the iPhone concept that resistance becomes support and support becomes resistance. And that is what we have in this Eurocard chart. So at this point, price came down, came up, came down, came up, and broke this resistance at this place. And when it broke this resistance, it went up and created a support here. So looking at this chart, this is a resistance turn support. And at this point, the market has broken the resistance. And at this point, what you want to be doing is trading above the resistance. And you would see that right here, the market is also creating a support around this place. So now, looking at the concept of support and resistance, once you have to understand that when you are trading, you have to trade based on the level or the area the market is currently on, depending on the time frame you are using. Now, this is support, right? But the market has moved past this support. You don't have to wait for the market to come to this support again before trading, because anywhere the market moves to, the market is going to create new areas of support and resistance for you. And this is what is happening at this market currently. At this point, the market came to this area, which has served as a resistance. You see that when the market breaks this support, there was a resistance created at this zone, because anytime the market came to this zone, it broke, it came back down, and people buy again as support. But at this point, it broke the resistance and created another support here. So now, me as a trader analyzing this market, at this point, I want to be watching out for at this support, this minor support that the market has created, for a bounce, because the market has come down to it at different intervals and bounced off it. So let's look at it. Market came down here, bounced, came up, came back and touched this area again, went up like this, and then came back to this area of support. So anytime the market came to this area of support, the market is giving you another opportunity to buy and target this area. So when you are buying at support, you are most likely targeting resistance. And when you are selling at resistance, you are most likely targeting the closest support to the market. So now, me as a trader analyzing the market, I want to be trading the bounce of this support unless the market breaks it. But the reason why I am most likely going to trade this bounce is because at this point, markets has given me long wick candles. Actually, guys, I'm actually going to make a video on candlestick and how you can trade candlestick to be able to I know when to enter a buy in a support and when not to. So if I want to trade the bounce of a support, because I told you earlier on that if you want to trade support and resistance, you either trade the bounce or you trade the break. So if I want to trade the bounce of this support, you see that when the market got to this support, it created a long wick candle, which is like a rejection, telling you that the market tried to break this support, but it could not. That is why you have a long wick here, showing that the market broke down, but it came up again. Then we create another long wick candle here that is bullish, then another bullish candle, then a bearish candle, which is a red candle, a bullish candle, bearish. Then we have a bullish candle, telling you that the market is ready to move in a bullish direction and take a long trade. So for me, I'm most likely going to be taking a long trade at this area. I'll put my stop loss just below the resistance at this price where the wick store ended, and I'll put my target somewhere around here, which is going to be like 1:3 trade. This 1:3 trade is more like, okay, you are taking a risk, because this area of stop loss is more like a risk, because anytime market comes to this area, I'll be at loss. Anytime it comes to this green area, I'll be at profit. So I'm trading a bounce of this support level, because I have confirmed that through the candles forming here, the market has refused to go below this area, even though it broke below it, but it went up again, and it has refused to stay below it, and it's up here again, which is signifying the strength of the buyers and the fact that the buyers want to continue to push this market upward, and I'll be buying. So that is how to analyze the market trading, or to analyze the forex or the crypto market trading the bounce of support level. So if you want to trade the break of support or resistance, it's pretty much simple and straightforward. What I do, let's say I want to trade the break of this support, one of the things I do is that I look for break and retest. For example, if market breaks below this area, then retest it and stay below this area, giving me bearish candles, I'm likely going to trade the break because the market has clearly broken out and retested, telling me I'm about the market telling me I'm about to go short, right? But in this area, when the market came below it, it didn't stay below it. It went up immediately, almost immediately, and stayed above it, giving us strong bullish candles. So that is pretty much my criteria, some of my criteria rather, for trading support and resistance. But for break, if the market breaks below, stayed below, and retested this area, then I'll be looking for an opportunity to sell. Or maybe when the market breaks below, it breaks below with momentum. When I say momentum, it means a candle like this. You see the candle, you see that the candle has a very strong bearish momentum. If a candle like this with a strong bearish momentum break it and it stay below, and we are pretty much sure that the area of support has broken and we're likely going to go bearish in the market. So let's look at some of the things that have happened previously in the market. Alright, let's see when market broke this resistance. When the market broke this resistance, you would see that it broke with a very strong momentum candle, right? It's not a candle, it's not as if it broke and then came back. It never came back. It broke out, and this candle that signifies the breaking out of the resistance is very strong. And that is pretty much telling you that it is breaking out with momentum. So now when I trade support and resistance, when I trade the bounce based on candlesticks. When the market comes to the support level or the support area, I look for candlesticks that tell me that the market is going to continue higher. And that is why you have to watch a video I made about candlestick patterns, like an ultimate candlestick pattern tutorial that I make, where I explain to you how to trade candlestick and how to know the candlestick that tell you that the market is likely going to go bullish or go bearish. So when I trade support and resistance and I trade the bounce with candlesticks. When the market approaches the support, I look for candlesticks that tell me that the market is going to bounce. For example, this well, that's pretty much how I trade the bounce and break of support. So when you're trading support and resistance level, you are either trading the bounce, which means when the market gets to the support, it's going to bounce and the market is going to move in the opposite direction, or it's going to break and it's going to move in the opposite direction. So if you want to trade the bounce, for me, I trade the bounce just looking at the candlestick patterns that form at the area of support. So when candlestick patterns are formed signify that the market is going to reverse from that support, then I trade it using the candlestick. And if the market doesn't give me candlestick patterns that are going to signify that it's going to bounce, then I wait for the market to break and retest, or break with momentum. So if it breaks without momentum, I wait for a retest. If it retests and it stays below the support or above the resistance, then I know what to do. And if it breaks with momentum, like a very good momentum, I know that this market is going to break the support and resistance and is going to continue in another direction. So that is pretty much how I treat support and resistance. If you got value from this video, ensure you share with your friend. Hit the like button, is very, very important, and subscribe to my channel, and I will see you in the next one.